Hello there and welcome to the weekly outlook. Okay, so we're just going to go through the calendar and see what we've got going on next week, and just to recap on some of the trading plans that we had last week. The main one obviously was the euro, which turned out to be quite good. We had that non-farm payroll, which gave that spike up to the perfect price entry level that we were looking for there. Now, what we've got to consider is the data that came in on the non-farm payroll was actually quite poor, but for some reason the market is still anticipating a rate hike from the FOMC, from the Federal Reserve. Now, there's a couple of reasons why this could be happening, but the main one is the fact that the market does feel that the FOMC are obligated now to raise rates by December due to bubbles forming in the housing market. And the data that has been coming from the US and the strength that's been in the US economy in the last sort of 18 months does warrant the rates to be higher than where they currently are at the moment. So although the employment data has been a little bit poorer on this occasion, it doesn't necessarily mean that that's going to stay that way. However, it only seems to have strengthened against the currencies which are weak enough to allow it to do so. If we look at the pound, for instance, we can see that the non-farm payrolls did have a negative effect on the US dollar, and in fact cable or pound US dollar did in fact buy up, only with a short downside in comparison to what happened with the euro. So the data in the UK has been particularly good of late, even though we have been obviously the Brexit situation going on. But as it says in the analysis there, the Article 50 hasn't been submitted yet, and we could see business confidence decline towards the end of the year, which is why I've got a ballpark figure to sell the pound US dollar again, but not until around about 135. Okay, which is much further up here, and we have in fact broken out of this triangle pattern. We did have an original trading plan to sell from this, which did pay off, and it did pull down to these areas of support and resistance which we suggested, and give us an early possible breakout of the triangle pattern which we've seen develop. But obviously that non-farm payroll has pushed us through there, which causes us now to believe that we could possibly see some more further upside. So at the moment, the ones I'm going to concentrate on next week is continuing to sell the euro from the trading price that we had, which is 11240, down to the 1108 level. Okay, so we're going to keep that in place, but we are going to lock in our entry level from here and just lock in a little bit of profit of around about 30-40 pips, just in case we get a reversal when markets open. Now obviously we have got a bank holiday on Monday in the US, so liquidity could be light in the markets, which could cause unexpected volatility and some spikes in the market, so we need to be aware of that as well. But looking forward in the week, we've got some data coming out on Australia. We've got the cash rate, the RBA rate statement, and we've also got Canadian dollar rate statement as well. Now these are commodity linked currencies, so it's important that we know what's going on in the commodity market at the moment. And there has been talk again on the news feed regarding OPEC meetings and a cap on oil production, which should stabilise the price. However, as we can see from the oil chart, we did have a bit of a downside in oil towards the end of the week, which is consistent with strength in the US dollar. US oil does tend to decline with a stronger US dollar, so we need to bear that in mind as well. But looking at Australian dollar individually, the RBA rate statement due out on Tuesday, although they cut rates in the last meeting, we're not actually expecting them to cut rates in this meeting on this occasion. And it was a bit more of an insurance policy against weak inflation, to the reason why they kept they cut interest rates last time. And I think they'll want to see the fruits of having a lower interest rate to whether or not it will improve inflation before they make any further decisions. So the rate statement is going to be quite important because it will give us some forward guidance onto whether the Aussie is going to be stronger or weaker against the US. Now, at the moment, you can see sort of technically we've had a bit of a spike up and a bit of a decline from the NFP figures, and we're sort of back around this 7.560, 7.76 area, which seems to have been key. And if we just extend this trend line from last week's analysis, you can see that it's not far from rejecting that, and it could be the signs that we are going to see further downside. So I think once we get closer to that fundamental data coming out on Tuesday, we might have a better idea of what's going to go on. And also it's going to be important to see how the market continues to react to that non-farm payroll figure on Friday. If we do still see the US dollar strength coming through, then obviously the Aussie could decline if the RBA mention further rate cuts in future. So one to be aware of, but again, we do want to see how it develops and see how the data develops and how the sentiment in the market falls sort of after the bank holiday. Now moving through on the calendar, again we've got some pound data, services PMI, which is expected to come in slightly better than previous again, so we could see further strength in the pound. And looking at it on the chart now, it kind of looks like we could see a retest of the triangle pattern or this area of previous resistance around about the 13260 area before we get a further move up, and then possibly a retest of that 135, which is where we're going to be looking to sell. So I'm not going to be concentrating too much on the buy, more so on the sell, but at a later date, so it's not really on the top of my agenda at the moment. Now the BOC rate statement that's coming out on Wednesday, again not expecting them to change rates on this occasion. The data has been fairly mixed. Inflation has dropped again. It seems to be a bit of a global situation at the moment where inflation is struggling to reach the monetary policy's mandate of central banks. And there's a lot of questions going about whether the central banks are in fact being able to control or manage inflation across the globe at the moment, and we'll keep you posted about any developments in that sort of situation as we find out more. So still, again, being a commodity-linked currency, we'll be looking at oil closely, seeing whether oil will continue in its declines, and if that is so, then I would expect the US CAD to possibly bounce from one of these areas of confluence or support and resistance. Now at the moment it's just breaking through the 50% of the latest Fibonacci up move. We have got a 61% there, which coincides with this area of resistance around about 12950. So that will be of interest, but we will be looking at the technical levels, seeing if we get rejection, and then seeing if we get a move up, and then possibly retest these prior areas of previous resistance and support. So again, waiting to see how the market sentiment develops after the bank holiday, and taking it from there. So they're really the data points that I'm interested in. We have got a GDP price index on the New Zealand dollar as well on Tuesday. We haven't got any forward guidance on that, on what is expected. We did have quite a large increase in the dairy price index from the last GDT reading last month, which did cause a bit of a spike in New Zealand dollar. At the moment, it still is one of the currencies which has a high yield. So when there's risk off in the market, people will use traders will use safe haven flows such as Japanese yen and higher yielding currencies such as New Zealand dollar and Aussie dollar to protect investments. So even though we are in a rate cut cycle for the New Zealand dollar, I'd be a little bit cautious about jumping into sales just yet, and it might be worth waiting to see that GDT reading prior to taking any positions. At the moment, we are still hanging around the 7.3 area. It seems to be quite consistent at sort of and struggling a little bit to get much higher. So technically, it does sort of read a sell, but I'd like to see that data come out before taking trades. Okay, so that's it for this week. I hope you can make some pips, and I shall catch you next week. Thank you very much for watching.